Hello, I'm Greg Bennell. Welcome to TD Active Trader Live, brought to you by TD Direct Investing. This is your educational one-stop shop for in-depth market analysis and investment insights to help boost your trading potential. Coming up, Canada and Mexico officially off the tariff hook for now. But the trade turmoil continues as China retaliates against Trump with new levies on American products. We're tracking the market reaction, including a closer look at the impact on gold and currencies. Plus, our trading panel is ready to debate the bull and bear cases for Uber Technologies just a day before its earnings report. That's all ahead. You're watching TD Active Trader Live. Little time to catch our breaths. Mexico and Canada getting a 30-day reprieve. We saw the markets calm down. It was a bit of a roller coaster ride yesterday in terms of market reaction. We got some green on the screen actually today on Bay Street and Wall Street. Let's start with the S&P 500 up modestly to start the session. So we do get that 30-day reprieve, but those China tariffs did kick in at 12:01 a.m. China in turn retaliated pretty quickly, its own targeted tariffs. Apparently, though, there will be a conversation in the days ahead between Trump and Xi Jinping. So is there room for negotiation? We didn't think that yesterday, heading into our own deadlines, and then there was a negotiation. Basically, stay tuned. Minute by minute, it could change. Let's dig into the heat map and see what's moving beneath the surface. We're still in the middle of all this tariff and trade tension and controversy, getting a crush of earnings. So we're actually seeing some stocks moving today just based off what they have handed in, noticeably in the healthcare space and the pharmaceutical space. You're seeing a bit of mild green on the screen for some of the big tech names, including NVIDIA as well. But we do have some stocks making some big moves. Palantir, I want to show you this one. The stock's up 26% in the early going today. Basically a beat on the top and bottom lines for the most recent quarter, stronger than expected guidance for the year. This company, if you're not familiar, provides software and tech services to U.S. defense agencies. And the CEO, Alex Karp, saying AI is powering the company's growth. And they say they're in the early stage of what he calls a revolution that will play out over years and decades. The stock and the market does seem to be reacting pretty positively to what we're getting from Palantir today. Also want to show you Merck, a stock moving in the different direction. A full year guidance falling short of the street's estimates. Weakness is linked to its Gardasil vaccine. This is aimed at preventing cancer from HPV. That's a sexually transmitted infection. Well, Merck halting shipments of Gardasil into China. It's a pretty important market for the drug maker, but we've been hearing in previous months, really since last summer, that sales of that product in China have been weak, and it is weighing on the name, as you can see today at the open. And that's your market update. All right, joining us now for a more technical take on what is driving the markets here in Amin, Jason Natick from our direct investing team. Here we are, guys, on another Tuesday. No shortage of things happening in the world, obviously, minute by minute, can leave us breathless at times. But we're here to put some context on stuff here. And what are you watching?
Absolutely, yeah. So we just wanted to see how the indexes have been faring out of the talks that took place yesterday. Mainly, we wanted to, I'm going to pull up the Dow Jones. Yeah, that seemed to be at the 11th hour.
There was a few phone calls, right?
A few phone calls were made in a flurry there.
Right.
But the salvo being the Dow Jones. So last week, of course, after the tumultuous news that kind of rocked the tech markets, the NASDAQ and the S&P, the Dow was the one index that, in fact, fared better than the other three. The other two ended up in the green for the week. It also is kind of teetering on those highs. 45,000 is where that key level is for the Dow. That would represent its all-time highs. Looking at the chart, we saw this parabolic move come out of December where it shook out, and then you had demand come back up here with the industrials here. Now it's kind of just peeled off of that high level there, but in the coming days, it's going to see if we can retest the 50-day moving average, which is down at this bottom blue line over here. So if it can break through, though, that's the key. It's kind of forming a move where we have this cup and handle formation where if it swings back up there, has another breakthrough, we could see it push beyond that 45,000 mark. But with all the geopolitical risks and tensions, that could be something that could be sort of a bearish sort of hindrance on it.
You say risk, I think gold.
You think gold. Exactly. That's where we're going to next, Craig. You read my mind. Let's go and talk about gold. Geopolitical risks, of course. Whenever you have that, of course, this is risk on environments, and that means gold, traditionally regarded as a safe haven, also because it is negatively correlated with the markets. So usually when equity markets and bond markets go one way, gold tends to go another way. In this case, it's actually breached all-time highs now. It actually hit 28.48, which per ounce there, representing new highs there. Some of the big things I just wanted to mention is whenever you have these sort of conversations, you'll see, with them going back to the negotiating table, you'll see gold sort of peel back, and then when it's back on with tariffs, that conversation, remember, we're just on a pause. Yeah. We'll kind of see it still tear up there. The other interesting thing, fact that I found out was demand over the last few weeks has been so strong for gold that it's caused, those gold warehouses inventory to increase by over 30% over the last 2 weeks. So traders are definitely shoring that up there. And with China just putting their tariffs on to the U.S., 10 to 15% is what the range is for them on a wide-ranging number of products. That's further going to enhance. The one thing I will mention, which Greg, you talked about, was President Trump said that his first 100 days, he wanted to meet with Xi Jinping, president of China, and Putin. So it's obviously his main thing is he wants to get to the negotiating table, end the war, the Ukraine war. And if he can somehow come out with a deal with China, then we might see a little bit of a bearish move down on gold there. We'll see what happens there. Finally, the last thing we're going to look at is, again, all related to this, and that is our U.S. dollar index over here. Now, the U.S. dollar index has got the market on nerve because it was hitting these highs, hit 110, and so for our viewers, the index is basically a measure against 6 major currency pairs the U.S. trades against, and so it's shown a lot of strength. It's been on this strong upward trend. It's hit these new highs over here. It's kind of peeled back. There's a short-term sort of correction it went through, but then it's still within this overall upward trend there. So if we can breach that, that's something to look for. I'm just going to mention a couple of things just with this tariffs because we're on a pause and see what this could mean for that. So if you have in risk on with these tariffs potentially going on, the 25% and the 10% we know from China, that represents goods valued about 1.3 trillion. That's 5% of U.S.'s gross domestic product, U.S.'s GDP. That's a lot of zeros. That is going to be, exactly. So that is, even though we got that reprieve, that's still going to have a major impact on it overall there. And then obviously the biggest sector that might be hurt from all of this is going to be the automaker sector as well. You got a strengthening dollar. Honda and Toyota are two pivotal ones that have a lot of operations in Canada. And if they're not able to really, and their most profitable vehicles, the RAV4 and the CR-V, are made in Canada. So that's going to be something to look at. So that's what we got on Kia. No, Jay, you've got something that ties up the story.
The thing about the whole tariff conversation is like autos obviously spring to mind, other parts of the economy, oil and gas, but beer, wine, spirits.
Hey, that hits right close to home, right? It is one of those things. And so I wanted to take a look at Molson Coors today, and somewhere Bob and Doug McKenzie are throwing a fit, right? We all know them from their famous sketch on SCTV. So this was one of the more high-profile kind of examples with Ontario Premier Doug Ford removing, or was slating to remove.
They were getting ready. I actually talked to a few employees just colloquially last night saying, so you guys putting the stuff back on the shelves? I said, well, we were waiting all day to see if we had to take it off. That was going to be the end of the day for them.
Maybe the LCBO employees had more insight than we did on what was going on.
Sidetrack.
So what was interesting to me, and like the tariffs, the threat isn't gone. Just like you mentioned, we've now on a pause. So I wanted to kind of take a look to see how TAP was reacting to this. So let's go ahead and bring up the chart. I've got that here. Now, the stock itself has not necessarily been performing great over the near term anyways. So this news of the tariffs have really kind of pushed the stock downwards. Even before the tariffs, we had broken below kind of a long-held support and resistance line of $57. We've seen the stock push back. It was one that we had broken earlier on in November, and then its first chance to, when it retraced back to that support line, it didn't hold. So what's interesting to me, though, is now that we've kind of heading into the earnings next, I believe it's next Thursday, we've got, with downward pressure, there's the next logical lines that the stock might be supported at. We're talking $53. And if we break that down, it is $50 is the next kind of where that move looks to be, which is another down, that's like shedding another 6.5% off its current prices. So even without the threat of tariffs for the near term, the price might be in jeopardy. So something to keep an eye on next week during their call.
All right, interesting stuff. Interesting eyes on the markets. Thanks for that. If you have a home question for us, more like a question for you watching us from home. We're not going to answer questions about your house specifically. Here's how you can get in touch with us about the markets. Email td.activetraderlive@td.com. For more information about the Active Trader platform, scan that QR code on the bottom right-hand side of your screen. It's going to take you to our TD Active Trader Live website. And I want to point out, you scroll down, you click on the Explore TD Active Trader tab. There you're going to find a tab that says Attend a Masterclass. Well, this Wednesday at 2 p.m., team is hosting an interactive session about TD Active Trader, designed to get you more acquainted with the platform. Jason, you're going to host the class, first of a 3-part installment, going to take place over the course of February. Give us a little taste.
Yeah, I'll be there with bells on. So we've got a 3-part series. Our first class, which is running tomorrow at 2 o'clock, it'll be focused on kind of some of the key features of customization, how to place trades, how to manage your trades in the platform. Really looking to show that off. But the following weeks, we've also got sessions focused around option trading and all of the different ways you can make the platform your own. And then we'll be focused on researching charting. It's things we really do heavily in this program. So it's really all going to tie back together. If you've got the time, come check us out.
All right, sounds fantastic. Registration is required for that, and it is open now. All right, it's time for Trading Debating. This week, the stock in the spotlight is Uber Technologies. Before we get going with the debate, gentlemen, just a reminder to our viewers that the securities and strategies discussed on our show are for educational purposes only, should not be considered investment advice or buy, sell, or hold recommendations. Options trading carries high risk, may not suit all investors. Significant losses are possible. So it's important to assess your own risk tolerance. Make sure you do your own due diligence before engaging in trading. Now let's get back to that stock of the hour. Uber Technologies. What made you guys pick this one to debate here?
So since Uber's inception, they've kind of been the disruptor in this space, when it comes to sort of ride-sharing conversation. Many competitors have come and gone, but a few have been able to stand toe-to-toe with Uber. Last week when I was in town, I took quite a few of them, in fact. And it was interesting because you hear conversations with strangers saying, how they're going to travel to an event, and they would say, I'm Ubering. And that's when a company becomes a verb.
Yeah.
That's when it can lead to a powerful market leverage. And give us some food for thought there to peel back on with the stock there.
Hey, we covered Uber in one of our technical updates a couple weeks ago when it was announced their share buyback program in conjunction with Bank of America. It's always nice to tie things together. So really looking forward to kind of digging into the details here.
Absolutely.
So we're going to dig in. I got my bell here. It's time on the clock. You get dinged out. Last week we had that technical glitch, right? So you guys actually couldn't see actually couldn't see the counter because usually they got an eye line to it. So today it might be a little bit easier on you to pace yourself. So let's get that time on the clock. Each have 2.5 minutes to make the case, then a little bit of time to counter. You draw from a hat every week to decide who's the bull, who's the bear. Hiran, what'd you get? You got the bull case. Why don't you kick things off?
All right. So Uber's mission statement, let me start with that, is to create opportunity through movement, and they have certainly done that. When we look at the overall company, and we'll talk about the fundamentals, they're strong, their growth is accelerating, and the outlook for the future does look pretty bright by all accounts. So the stock is something that is at growth at a reasonable price, and when I peel back some of those numbers, you'll get a sense. But let me start with some of the big sort of news, what they're doing in the industry. So they're part of 2 secular growth industries right now, and that is basically ride-sharing and food delivery. That's their biggest thing. So Uber Eats and then Uber, of course, the ride-sharing business. They've been able to tap into also grocery deliveries now. That's another thing they've ventured into. Convenience, alcohol deliveries they've gone into. In fact, one of the points I said, one of the partnerships that they've made is with Home Depot and Lowe's. So now they even do home delivery on home improvement projects and the likes there. Speaking on that note, they also partnered with Delta Airlines. Delta Airlines was their exclusive partner with Lyft before. They just ended that relationship and switched over to Uber now. So they've been forming these alliances there. The other thing that's also a strong bullish case for this company is Uber One platform. And this is their subscription model. Any business that kind of moves, we know that this is something that adds a little bit of bench strength to the overall balance sheet. And this is a way for them to actively cross-sell and between their offerings. And one of the things I wanted to mention was they started as a ride-sharing company. It translated into Uber Eats, of course. Now there's groceries, alcohol to mobility. So it's almost like cyclical, and they get you sort of in that entire ecosystem. They have 25 million Uber One members at the moment. It's priced at about $9.99, and if you get the Euro Plus, it's a bit discounted. Plus, you get the other perks along the whole ecosystem there. So that's one thing. Also, interestingly, these members made up 40% of all the bookings for the Uber Ones there. The last thing I'll mention is autonomous vehicles, and I know that's a hot topic, of course. They have a vast amount of data. They teamed up with NVIDIA to sort of use AI solutions with the data they have available and looking at strategic partnerships. They were into building autonomous vehicles, but they did drop that there. I'm going to hold on the fundamentals, and let's go into the charts over here. And let me show you what today's price action is painting the story for me today on the charts over here. So it's going to help a little bit. So we saw Uber mid-October hit the highs, and then it kind of went in this correction territory. It recently broke out just into the new year, just above that, and is now crossing above its 200-day moving average.
Did you guys used to see the counter over there? But did you used to back in the old days?
We did.
I can see it, but you could.
No, we don't have it there, so I was like,
I think we're upping the difficulty as we get deeper and deeper into the show. We're upping the difficulty on
Not
you
even
guys.
April Fools yet.
Exactly.
All right, so let's get 2.5 minutes on the clock for Jason and try to get your internal clock.
I know. I got to keep an eye on the clock on the top of my screen here to see if I can keep it going.
I picked that up too late.
Nice. All right, so let's take the other side. Now, this might be my old man get off my lawn type of rant here a little bit, but ride sharing, and other members of the gig economy, right? The gig economy is all those other kind of part-time work that you can stitch together to make some hopefully a decent wage. These businesses they're still so new, they're still so ripe for change, they're still so ripe for regulatory interventions, and here's the thing, heck. Uber is not even old enough itself to have a driver's license. So if we're pinning our hopes on its history, we still have more to think about. But the things that are underpinning my bearish case on this is regulatory and legal challenges. We're talking about competition, and I do want to talk about autonomous vehicles a little bit here. So, from a regulatory perspective, the gig economy, right? These were independent contractors. We're talking about the Uber drivers. But starting later in the summer, I think it's July 1st, when these people or their employees rather, are now going to have to actually be deemed employees to get a minimum wage and benefits under the Employee Standards Act. So this is marking a significant shift for contract workers. And then this is not so light of a topic. There's multiple lawsuits from an Uber perspective. Some of them with regards to driver behavior. There's also a class action lawsuit here in Canada around the government is stating that the company's not done enough to keep their riders safe. So interesting there. Those are tough headwinds, tough PR. Maybe nightmares to kind of navigate through.
Sure.
Next, I want to talk around competition. Right. This is a company that's got a really narrow moat. There's companies that are around the world that are trying to monetize. They're seeing the success that Uber had here in North America. They're really trying to run with it all over the place. We're talking about countries in India, big population centers. Ola, doing very, very well over there. Gojek is a company, in my research, it's really dominant in the Southeast Asia space, but they've even got really impressive investors. We're talking Google, Meta, and PayPal have all joined services with them for that marketplace. And then DoorDash, we're thinking about competition in the food delivery space. Well, they're the big player. They're not Uber. They're making up 63% market share. All right, then moving on to the autonomous vehicles side of things. This is a risk for Uber, and I want to show this on the chart, because when I actually just kind of trying to play out some of the price action, play out some of the timing here, when robotaxi
denied on the pitch here. Denied on the pitch. Maybe we'll discuss it after. Maybe I should be like 1 minute. I give you something. But you have time to counter now. So if you guys want to rock the charts now, I'd say go for it.
All right, so I'm going to actually hit back at you, Jay. So you talked about competition, and I'm just going to tell you about the total addressable market and how much of how market share Uber is at right now. So in North America, they stand at 77%. The only closest competitor in the North American space is Lyft at that 22 and change. When we talk about its other major competitors, Didi would be the name that came to mind in China, of course. Right. But what Uber has done strategically is also its investments. While it doesn't have direct, maybe jostling for position in those other countries. In places like India, for example, they have investments in Zomato, which does food delivery as well. So they've kind of done investments in all these companies where you don't have to directly compete when you can just be part of the, get a piece of the pie, essentially. From a valuation standpoint, I also want to mention, we looked at, price to sales. It's fairly low, 2.74 according to where the stock is trading at right now. It trades at a discount compared to the industry, which is sitting at 6 on there. The other thing is compounded annual growth, we call the CAGR, for 3 years is between 15 to 19% is what they're expecting. Free cash flow, that's, you're talking about a CAGR of about 81%, which is like top 10 of the industry, and they turned a profit. They've just started turning a profit over the last 2 years. Yeah. So they're on their upward trajectory right now.
But there are some other, metrics in their balance sheet that kind of, lead to some concerns about inflexibility and sensitivity to borrowing costs if they were locked in at higher rates, and that's going to be their debt. The debt has increased by over 20% just over the last year. We're now talking a debt for a company. It's a large company, but we're talking $11 billion of debt, which is about 7% of their market cap. So that's quite a significant number. And then let's get back into thinking about autonomous vehicles a little bit. When we think, I've got on my chart again, I do want to make sure I circle back to that.
You guys got about a minute left if you want to show some pictures.
All right, let's do that. So,
coming
off its highs, Robotaxi, Tesla's kind of foray into the autonomous vehicles, thinking about being a potential direct competitor, at what was lauded as being kind of a failed event, actually still caused Uber itself to begin to sell off, and for the fact that they had thought they made a partnership with GM to partner in their Cruise autonomous vehicle lines. Well, GM out of nowhere has now canceled that program, so Uber's left kind of holding the bag, looking for, we've spoken about the NVIDIA partnership, but it's a cash-rich business that is going to require ample dollars. If we're talking about debt, there might not be opportunities for other players that's not named Tesla and Google to get in.
Well, let me tell you this: they're partnered up with Waymo, though, which is Google self-driving, which is already in production and running, and they already tested it out in California. Yeah. So Uber is not looking to build autonomous vehicles; they're looking to partner up, and these companies would want to because Uber has this data, 10 years worth of data that you can use AI solutions for these vehicles. And Tesla's behind the ball. If they're going to try and reinvent and create a ride-hailing app on top of their vehicle, that's a lot of years before they get to a scale where Uber's going to get to.
All right, lively counter and back and forth now. You both get 90. All right, we're not going to time this. We want to go through what we got to go through here. Explain how you would trade it in options plays if you were a bull, as you drew from the hat. How could you possibly play this through options?
Yeah, so for this one, Greg, going back to the charts again, one thing is when you look at Uber over the last recent bit, it's kind of been choppy price action, been trading within these very range-bound regions with the support kind of sitting just around shy of that 65 mark here based on the chart. And on the top end of it, you could say the near-term supports at just above the 72 line. So for this strategy, I'm actually looking to collect some income, and so it's a strategy called the Jade Lizard, in fact. It's one of those exotic names that we have over here.
Exotic, it's fancy.
Yeah. So what we're going to do in the Jade Lizard, and I'll just kind of break down the trade, it's essentially selling a put, an uncovered put, and you're selling a bear call spread with it. So because we're doing selling, we want to kind of take that shorter time range. So we've looked at the March cycle over here, which is about 45 days out. Now, the key for doing a Jade Lizard trade is that the total premium that you collect, because you're selling a put and then you're also selling a call spread, so you're getting collectively a premium, the premium has to be greater than what the call spread width is. So in this case, what I've chosen is going pretty much right at the money on the put at 67.5, and then going far out on the call spread to selling the 77.5 and buying the 80 call. So that's a $2.50 difference. But the total premium that I'm collecting right now is $3.75. So this is one of the interesting things with this trade is, and Greg, I know you love asking me about risk. And
risk.
what's the risk?
We always got to know what we're risking, right?
Yeah.
What are we putting out there?
So with this one, this is the few times where I get to say there's no upside risk, and I'll explain why.
No upside risk.
No upside risk.
Okay.
Yes, there is downside risk, so let's talk about it. So on the risk
downside
profile,
risk is usually what I worry about.
Yeah. So in this case, because we're selling it can also technically go against you when you're doing a bear call spread if the stock moves up. But in this case, because our total premium we sold is $3.75, we're collecting, and the spread is only $2.50. If the stock, in fact, does go up, you can see based on this risk profile, the most we would have to pay back to buy that spread is $2.50 but we collected 375. So you still keep a little bit off it as a profit. So you can see in this risk profile graph, we never go below zero on the upside. However, on the downside, if the stock does fall below, we look at our break even, which is sitting at about 63.75 based on the credit I'm taking right now. And so if it does drop below 63.75, then I start losing it. The other thing is you also have assignment risk on this trade. So that means I could be put to the shares and I have to buy them. And the other big question for traders putting on this trade is, are you going to be happy to buy it at the strike price that you sold the put for? In this case, looking at the technicals, this is a price that a trader could consider based on what they see where the support is.
Okay, interesting possible way to play it on the bull side. What if you're the bear? How could you possibly play it?
Heron was very fancy with this trade, and I do appreciate that. I'm going to be a little bit more vanilla with my trade. Let's go back to my chart as well. One of the kind of tipping points, inflection points that I see here on Uber, we're around $70. Yep. The big move up this morning is really kind of testing that threshold, so really interesting to see where things kind of play out for the remainder of the day. But I do also want to be keeping in mind that tomorrow is earnings. It's caused some heightened volatility. I'm also thinking about selling for income in this particular case, but we're going to be selling a bear call spread or a credit call spread. Options are famous for their multiple terms and acronyms and things like that. So I want to be thinking around that $70 range that I can use that strength of resistance to my benefit to hopefully play something and a trader could keep the premium if it expires worthless and out of the money. So let's jump in to the option chain. We're thinking. My goal when I'm selling options is to have them expire worthless. I'm thinking something over 70, maybe looking at in the $71 range. This is a little bit of higher delta than I would normally do, but we've got such little time and I'm trying to get enough premium out of the trade to make it worth my while. Sitting around 40, deltas are a rough probability measure for in the money, but I want to go ahead and take a look in the platform, the actual probabilities. We've got in the money, out of the money, as well as probability of touching. Probability of touching is one, when somebody taught me about this, they told me about the pucker factor. There's the likelihood that the stock is actually going to hit that price. So I got to be, my willingness to sweat this out. It's sitting around 80%, but 40% likely to be out of the money. So it's giving me a little bit of certainty there. But looking at the trade, I'm thinking of something, making my long strike a little tighter, just because I don't want to allow the earnings to get away from me, but I do want to take advantage of the volatility crush that's going to come afterwards. But I've got a $71 short, $76 long. These are out to this Friday. It's netting me $1.36 in terms of the credit. One of the ways, you can always look to play for more time in the option chain. You can go ahead and just toggle the expiration. It's really not netting me anything more than not even a dime. So it's not doesn't seem like it's any extra additional benefit for me to play to time. So I think somebody could play this in terms of a short call spread, take in that credit. Hopefully we can hold that $70 support and we can expire worthless and out of the money.
The risk. What's the risk here?
I had a hunch that one was coming here. So now the risk.
What's this guy who's always asking me about risks?
So here's what the credit call spread is designed for. It removes risk of a naked call or an uncovered call. So I now have 5 points of risk on this trade if the trade moves above 76, I no longer uncover because I own the 76, giving me the right to buy those stocks if it does go higher. So I've got that covered there. So it's a $5 wide spread that I've got here. I'm taking it $1.30, so it switches my max gain. So my max loss is going to be my width of my spread. So my $5 less my $1.36. Here's a little pressure. Do some math on the spot. What's that? 364. Would be the max loss.
All right, interesting stuff, gentlemen. Thanks for that. The bull and bear cases for Uber Technologies. Just a reminder to our viewers that this debate was for educational purposes and does not reflect our personal opinions about the stock. Now, before we move on, Jason, you were talking about probabilities in your trade. Something about sweating. What's going on?
Yeah,
tell us more about that.
Yeah. This is let's absolutely do that because probabilities are. It's when we're thinking about getting ourselves into a trade, we are allowing the math to kind of speak for ourselves. There's no sure thing in the market, right? Even if the probabilities are on my side, that doesn't mean I can lock my profit in. We speak about that risk reward kind of paradigm all the time, but being informed with the math and how the numbers are stacking up on your side can really be helpful. And understanding what I want to happen, like in my case, I wanted my trade to expire worthless, so I want to be looking at a probability that's going to indicate the chance that that's going to happen. So in the platform, I've been able to go ahead ahead and create an options column set that's got probability of in the money, probability of out of the money, which for my trade, that was going to be the kind of the most specific one to me. But then there's also something that may be a little less known to option traders, and that's probability of touching. That's what's the likelihood that the stock is going to at least touch, not cross, but it's going to touch. So if we're looking at those 71s that I was looking at earlier, it's a shade over 80%. And conveniently, what that actually works out to be is it's twice the probability of in the money. So just to kind of understand where that math come from, is this an opportunity for me to understand, okay, yes, I've had this, but it's going to expire worthless, but I've also have the pucker factor, as I called it, that am I going to be able to sit through and sweat out those close moments, and what's the likelihood that that's going to get real close to my strike?
Fascinating stuff. If there is a stock you at home want to see our debaters go head-to-head on, send us your suggestion, td.activetraderlive@td.com. And for more information about the Active Trader platform, including information about some more complex trading ideas and theories, scan that QR code on the bottom right-hand side of your screen. You're going to find great resources under the Learn More tab. It's going to help enhance your trading skills, amplify your knowledge. All right, it's only the second day of the trading week. We have lived a lifetime so far in the past day and a little bit. Anything else going on the rest of the week?
Yeah, Greg. So, I mean, there's a lot of volatility this week. 25% of S&P companies are reporting earnings, of course. There's a few bunch in there that we're going to be looking at. Non-farm payrolls on Friday. Just want to cast a mind to our viewers. Last time they came in much over estimates, yields moved up, and stocks sold off. So this time, if history rhymes and if they come with a strong report, we could see downward revisions. But it's basically a market-moving catalyst that's adding to everything that's going on. Another one that I've got on just keeping a close eye on is Alibaba. Unconfirmed, but they're potentially reporting earnings tomorrow based on what they did previously. But they're making big news because after that DeepSeek noise, that was ruffling the markets and a few feathers
feels like yesterday. A million years ago, but that was a week and a day ago.
Exactly. And then Alibaba, in fact, came out with their own version of their large language model or AI called Qwen 2.5 Max, and it is supposed to, they touted it as comprehensively beating DeepSeek on all measures across the board there. So this would be something, hopefully they have some sort of forward-looking sort of news to give to investors and traders. The stock's been beaten, as you can see on this chart. I'm just going to allude to it. We've formed this triple bottom formation coming out. It's taken beating, but it's broken out of that, and it's coming out of both the moving averages right now, and it's really popped. So heading into earnings, we'll see if this momentum carries on.
Interesting one to watch. What are you watching, Jason?
Can I just say the big game on Sunday? Is that going to be?
There is a big game
on
Sunday.
There is
watching it.
An unnamed big game is coming up on
I'm glad
Sunday.
we're going to have avocado as well now and not have to pay extra for it. That's the other thing.
Yeah, no doubt. We've got lots, like you mentioned, lots of big companies are coming up this month. Actually, some that we've covered on this show, right? Amazon and Disney are coming up. But what I want to talk to you all is we're going to pull on that oil and gas thread like we talked about yesterday, or last week, I should say. It feels like yesterday sometimes. ConocoPhillips. Tariffs, we got a bit of a pause there. So, we discussed natural gas even yesterday in a conversation. They're a big player in that space. But there's still choppy international news and relationships that we need to kind of be mindful of. But taking a look at the chart, they've really sold off over the last number of weeks. We're talking like in the last 6 months, down almost 27% in terms of their highs that they achieved then. But kind of interesting things. We've got earnings coming up this week, and I've did some really short-term analysis. The stocks bounced, quite significantly on earnings plays over 10% over the last 2 earnings sessions. So really interested to hear where we're going to be coming in later this week.
No shortage of things to discuss. Always a pleasure, guys. Look forward to next week.
Yeah, likewise. I'm here.
All right, that's our show for this week. As always, investors should perform their own due diligence before trading. Thanks for watching.